Much more recently, last week, I noticed that in my own portfolio, physical silver, which I'd bought on an average of $20 an ounce, had exceeded handily my target. I bought the stuff at 20 because it was hated.
I believe they're cheaper now than they were a year ago before the big move. That's because of the huge increase in the price of gold and silver. Now, I expected this big increase, although to be honest, I didn't expect it to happen this rapidly.
Dunnigan, people who have been listening to our interviews over time, going back 5 years, I think will understand that a lot of the move that we've seen in gold and silver was merely pent-up price action. The circumstances that are in place today that are propelling gold and silver were in place in 2021 and 2022. But people's expectation of the future is set by their experience in the immediate past. So although the facts were laid out in front of them, they didn't have the courage to act. Gold and silver were coiled springs, and some of the tension has been taken out. It's as simple as that. Now, I need to say to people that most people require, even if they understand a narrative, price action to justify the narrative. And it's wild to see a circumstance where more people want to buy silver at 80 than did at 20. When the price moves from 20 to 80, understand that it is precisely 80% less attractive. That's just the way it works. The easy money is made when you buy based on hate. If there's a popularly held public pretense that's wrong and you bet against it, that's the easiest money financially you can make and the toughest money psychologically that you can make. I believe, Dunnigan, as you and I have discussed many times, that gold and silver continue higher, but probably at a less voracious pace. I believe it not because the price has gone up. That makes it less attractive. I believe it because I believe over 10 years the purchasing power of the US dollar declines by 75%, which is, sadly, very good for the nominal price of gold and silver. So I suspect we'll continue to have good years. If you try to measure the years that we have in the future, by 2025, you will, almost by definition, be disappointed.
One of the great paradoxes of investing is that assets feel safest after they've already surged. Silver at $80 suddenly attracts buyers who ignored it at $20, but higher prices mean lower future upside. The most profitable opportunities emerge when assets are disliked, ignored, or openly dismissed. Betting against popular narratives is emotionally difficult, yet financially rewarding. History shows that the greatest returns are made not when confidence is high, but when conviction is scarce. By the time consensus agrees, much of the easy money is already gone.
Gold and silver is now than it was on Friday. Now, the gold and silver mining stocks had good days. Could have been better, but good days. The GDX was up 5.7%, and the GDXJ was up 6.2%. Now, I mentioned on Friday, on the Schiff Gold Friday market wrap, that I thought that the action in the mining stocks was very constructive to a rally this week, because even though gold and silver finished down on the day, gold was down about 20, 30 bucks, silver was down a couple of bucks, the gold stocks all rallied and the silver stocks rallied. So that, to me, it looked like investors were starting to realize that it doesn't matter if gold and silver go down. These stocks are so cheap, even if they go way down, which they're not going to do. And some of the stocks had really good days today. Just as an example, my best performing gold stock was I Am Gold. That one was up 15.5% today. Of course, it's at a 52-week high. We actually own that. It's one of our top 5 holdings. Not just do we own it in the gold fund, it's one of my top 5 holdings in the Euro-Pacific International Value Fund, which, by the way, will be probably the #1 fund in its category year to date out of over 300 funds, in part because we do have some gold stocks as part of the portfolio, one of them being I Am Gold. So that one was up 15.5%. My best performing stock on the day that I own myself is a small silver company, which actually we own in the gold fund too. But Silver Crown Royalties was up 40% in one day. right? So this gives you an idea of what can happen. And by the way, 52-week low on this stock, 381. Where is it now? 1275 is where it closed. Today's high is 1360. So this gives you an idea of the size of the moves that have been made. But despite the fact that gold and silver stocks have moved up so much,
Gold and silver aren't rising in isolation. They're reacting to a weakening monetary backdrop. Over the next decade, the purchasing power of major currencies, particularly the US dollar, is projected to decline sharply under the weight of debt, deficits, and monetary expansion. In that environment, precious metals don't need excitement. They simply need time. While future gains may come at a steadier pace, the long-term trajectory remains intact. Investors expecting explosive annual returns may be disappointed, but those focused on preserving real value are already positioned correctly.
Well, the equities certainly have outpaced the metals last year, as one would have expected. What was unusual was that the normal progression, which is that the best of the best miners and the largest miners would move first, followed over sort of a 2-year time frame, eventually by the penny dreadfuls. What happened in 2025 is that the smallest and gamiest of the mining stocks moved too, in very dramatic fashion. The consequence of that is that we have an odd market. The metals moved, the best of the best moved, but not as far as we would have expected, and the rest moved much further than we would have expected. What that's meant for me, personally, was that in October, I sold 25% of my junior stock portfolio, my junior mining portfolio, because I felt that the sector was ahead of itself. I felt, too, that by selling off 25% of my upside, I could eliminate my downside, which seemed like a very good trade. It is a truism that you haven't made the money until you've taken the money. What's probably instructive is what I did with the proceeds. I took half the proceeds and I bought physical gold and a package of 3 senior gold stocks, Franco-Nevada, Wheaton, and Agnico Eagle, which is to say I didn't exit the sector. I just de-risked. I went to beta. Normally in a bull market, you would go from beta to alpha. But as I say, this market short-circuited beta and went straight to alpha. And so I de-risked.
An important shift is happening beneath the surface of the metals market. Even on days when gold and silver prices dip, mining stocks are advancing. That divergence is a powerful signal. It suggests investors recognize how undervalued these companies remain, even after recent rallies. Strong gains across both senior and junior miners highlight growing confidence in future profitability. Historically, when mining equities lead the metals, it marks the early stages of a much broader revaluation. The market is quietly recalibrating what these assets are truly worth.
Much more recently, last week, I noticed that in my own portfolio, physical silver, which I'd bought on an average of $20 an ounce, had exceeded handily my target. I bought the stuff at 20 because it was hated. And you and I talked about this in an interview 4 or 5 years ago, the fact that silver was absolutely hated and a coiled spring. And I said to you that I thought that silver could handily take out its old nominal high at $50. Well, I was wrong. It took out 75 instead. The fact is that I bought the silver because I thought it was oversold and hated, and I thought it would recover. When my investment objectives were reached, I sold my silver, my physical silver, at least 80% of it. Now, there's a lot of people who are in place in silver, and for them, well, they have nothing to sell. What I have decided, for me personally, is that there's more torque left in the silver stocks, and I have a durable competitive advantage. For me, gold is a savings asset, and I haven't sold any of my gold. I've added to it. Silver is a speculative asset, and I'm a good speculator. So I decided to redeploy my physical silver assets into silver equities and oil and gas, which is to say I've used some of the outsized strength that we've seen in the last 3 months to shift my risk focus down rather than up.
This cycle has broken tradition. Instead of large established miners leading first, speculative junior stocks surged early and aggressively. That kind of acceleration creates opportunity, but also risk. Strategic investors responded not by exiting the sector, but by rebalancing. Profits from overheated positions were shifted into physical gold and high-quality producers, reducing downside without abandoning upside. This isn't pessimism, it's discipline. Knowing when to de-risk is as important as knowing when to buy, especially in markets moving faster than expected.
I believe they're cheaper now than they were a year ago before the big move. That's because of the huge increase in the price of gold and silver. Now, I expected this big increase, although to be honest, I didn't expect it to happen this rapidly. But it's even surprised me a bit, the speed that the market is rallying. Not that we're at these prices. I actually expected us to be at these prices a long time ago. We're finally catching up to where I knew we were going to be, but clearly we're moving a lot faster. This is going to continue. So it's a whole new ball game for these mining stocks. So they are still ridiculously cheap. I think there is tremendous upside potential in these stocks from here. And I think at the end of the year, people who did not buy gold and silver stocks here are going to be kicking themselves. And if you own them and you sold some because you thought, oh, look, I doubled or I tripled my money, let me get out, people are going to regret those sales. Normally, you don't regret taking a profit. But in this case, I think people will, because they'll be leaving so much more on the table. So my advice, again, is get into these gold and silver mining stocks. You don't even have to wait for a pullback. I mean, there are a lot of pullbacks, so if you want to be cute. But you know what? Doesn't even matter. And if you're buying my fund, you can only buy at the close. So, it makes it simple, right? You only get filled. My gold fund is Euro Pacific Gold Fund, EPGIX. We got a lot of small stocks like this Silver Crown, right? We got a lot of these little ones that have the potential to go up 40% in one day, right? You don't have that much potential in the big stocks, although when you get IM Gold going up 15%, that is a big move in one day. But a lot of my stocks were up 5, 6, 7% today. So that was only maybe double normal. But there are a lot more days coming like this. And I know a lot of people, I've been posting on X a lot, telling people, hey, go buy gold, buy silver. And people keep saying, why are you telling people to buy the top? And that's because it won't be the top for long. Remember, I forget, I said it first earlier last year, but I said the longer you wait to buy the higher the high you're going to buy. And that's it. Yes, I'm telling people to buy the top because today's top won't be the top for long. There's not going to be big pullbacks. Yeah, there'll be some, but they're not going to be big enough to wait for. And you never know exactly when they're going to happen because there's so much money waiting to come in to gold and silver. That's what the precious metals mining stock investors still haven't come to terms with. How much higher gold and silver prices are going. They're still worried that we're going to have a big drop. That's why they're reluctant to bid up these prices because they don't believe they're sustainable. The only thing that's not sustainable is how low they are. They are going to keep going up. And the reason that this is going to happen, again, by the way, the symbol on my gold fund is EPGIX, or go to Europac.com and look at, we have separately managed accounts as well in gold stocks.
Despite dramatic gains, gold and silver equities remain historically cheap relative to the metals themselves. Massive pools of capital have yet to enter the space, held back by disbelief rather than fundamentals. Many investors still fear a major pullback, but that hesitation is exactly why prices continue rising. What's unsustainable isn't the rally, it's the undervaluation. As reality sets in, today's top will look like a missed opportunity. For those still waiting, the cost of hesitation may be far greater than the risk of acting now.